All right, guys. Good morning. Good morning. Make sure that, okay, this is on. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Got CNBC up, talking about China unrest weighing on futures, protest of zero COVID policy. This is in Beijing, mind you. So, not looking good over there in China right now. I don't know if this is live feed that I'm watching. Either way, good morning, everybody. Hope everyone had a great Thanksgiving weekend. Feels like the whole, I feel like I haven't worked in like 2 weeks in this sense. But it's great to be back. Obviously, hope everyone had a great Thanksgiving. I know I did. Victory Monday, Cowboys won on Thursday. Some really good games yesterday. World Cup football, college football. Oh my God, it was amazing. But with that being said, back to work. Let's go and get to it. Bottom right hand corner of your screen, little black logo. Click on that. Turn on notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. Appreciate it as always. If you haven't already, make sure to subscribe. Really helps the channel, and hit that like button. All right, let's go around the horn here. Dow Jones futures down 231, NASDAQ down 79, S&P down 33, Russell down 0.71 this morning. Crude oil continues to weigh down. We're now below 75, 74.08, down 2.9%. 10-year yields are starting to bounce a little bit, 3.7% on a 10-year basis. Dollar index 105.77, down about 0.18%. The VIX 2219, currently up 8.24%. If you have not subscribed to our newsletter, make sure you have. We sent that out. Very simple. I'm going to go ahead and show you how to do it. So if you're part of the Discord server, don't worry. You get that anyways on the blog. But here, if you do want to get our weekly newsletter, which I've explained the VIX, yields, dollar, S&P, just click login, create your own, sign up with email. You don't have to buy anything. It's free. Just creates a profile, and then we'll send that out to you next week when we get it. We promise not to spam you with a bunch of nonsense. We don't sell your data. We don't sell any of that stuff. Again, it's just a way to give you the information direct. That's really it. And if you prefer not to email, you can always join our Discord server, or you could follow us on Twitter or on Instagram. Okay, gasoline futures down about 0.5% this morning. Gold futures 1765 with a higher dollar. That's down. Silver up about a quarter point, 2166. Copper futures down about 0.56%. Euro dollar 104.48. Remember, we were at 0.97, if you remember that, below parity. Let's go to dollar yen, 138.62, down 47 pips, even with the dollar bouncing a little bit. So the yen flexing its muscles. Pound dollar down 31 pips, 120.53. Bitcoin is below 16,000. 15,860. Again, we talked about this on the Discord server as well. Ethereum 1144, down 1.76%, still above the year lows. Ethereum outperforming Bitcoin this morning, and that's where we are around the horn. Don't have Bloomberg up. I have it on my phone. I was reading some of the stuff today regarding the China COVID stuff. So let's go ahead and talk S&P futures. We're going to go to this setup here. This includes our RSI. So this is a 1-hour chart, 20-day setup. You can see that we're holding slightly near that 4,000 level, holding above that 200 MA, excuse me. You can see the RSI nearing oversold. The volume has been not the best. So again, even a small fall or a small rise gets us to oversold and overbought within like a day or so. So again, try not to put too much weight into that. But let's go ahead and start taking a look at this. And there's one thing I talked about on the actual newsletter. Let me go ahead and bring it up. Here we go. Let me get the newsletter for you guys so I can show exactly how it sets up. Let me get the newsletter going. Okay, here we go. So here's a newsletter that we just set up. And again, nothing was really changed. Talked about some stuff. But in terms of dollars and yields being extremely important, we're going to go over that here in a second. But really what I'm looking for is the S&P 500, always SPOOs. But again, puts. Nearing that 200 DMA inflection point on SPOOs. If we get to 4120, that trend line was rejected 2022. A possible direction is in play. I prefer to trade futures contracts with the setup. Again, that's what we talked about over the weekend. So let's take a look at it. Here's the daily chart. Again, we've been speaking about this so many times. It feels like I'm repeating myself, but it doesn't matter because it's so important. Take a look at this trend line. Again, rejection, didn't even get here. So again, we're getting close to that 200-day. Again, I've been saying it over and over. We're not going to get just straight green shoots all the way higher. We are in the second month of a green month. We have the first time that we've had that in terms of the S&P this year. So October was green. November is looking to be green. We've already jumped 15% from the lows, 3502 to around 4,000, let's call it. So again, we have a slight gap to fill at 4026. Really, your support if you're looking to get puts, which I am as well. Again, if we start falling a little more, is really 3,900. Again, I would like to see this retest of this support, and you could see that kind of combining with that trend line here at 3502. It's been a clean trend line. Algos have been running the show. Basically, you could see we could pop to above resistance here around the 14th. But again, that 200 days kind of giving us that roadmap. If we get to 40, 49, that's probably another place where I'm looking to short. Again, on futures, not on SPY. But again, if I want to trade SPY, I'm actually looking for puts to 3,900. All I'm looking for is a nice retest, maybe to 39.27, that 100-day. That's fine, but 3,900 would be my target. So again, this is just the way it goes, ebb and flows. But we need to get this break of that 200-day of 39.91. If that does happen, I will start taking a look at some puts heading into Wednesday, if not Friday. We do have a couple of things coming up. Let's take a look at the week coming up. We talked about this on the newsletter as well. We got GDP on Wednesday. We got ADP private payrolls. We got Bullard today at 12. We got consumer confidence tomorrow. Fed Chair Powell speaks at 1:30 tomorrow on Wednesday with that GDP number. We got core PCE index. This is the inflationary data that the Fed looks at. And then we got NFP on Friday. So we got a nice setup for a week where we could start doing some damage. Maybe get a little extra cash for some of that Christmas shopping this year. So some good news in terms of Christmas shopping. I guess we'll go with the good news and then we'll go to some bad news. Here's the bad news first. Apple to lose 6 million iPhone Pros from tumult at China plant. Apple's down pre-market. And Shopify up 8% on Black Friday sales. So that's some good news and some bad news. So that's where we are. At least in terms of the Christmas shopping, Thanksgiving was strong. Black Friday was strong as well. Cyber Monday, we're in the middle of right now. So again, I'm still waiting for that 200 MA on the hourly to see if that does break. And then I could probably look at going short as well. So there was one freebie that our team did send to you guys on Instagram. Feel free to take a look at it. It is AMD. It is the stock of the day, your favorite. Let's go to the daily and take a look at it. First thing I went ahead is circled what are the targets or what are we looking for. So a break of 77.50, as you could see, is right here above the 100-day moving average. What we're looking for is to fill this gap around 83.38 if that does break. If we get below 70, then it would be a short. Let's go ahead and add that alert to 70. Let's go ahead and put 70.01. And then my target would be that 20-day moving average on daily around 68. So again, you can see that double top here. We want to see if we break that resistance, and then we could take a look at this gap to fill. Again, you could see how semiconductors have been hit. You could see this very, very structurally sound channel here where, again, if we break above 80, we could get a short squeeze to this gap fill and then close it. But again, we want to get above 77.50. You could do the 80 calls. You could do the 83 calls. I would say the 80 calls are probably your best bet since they're right on that trend line. You could leave a runner. If we do fill that gap, it should be a nice trade. If we get that push higher, the only way we can get that is if the dollar comes down, the dollar being so crucial. Take a look at the daily, that 200 MA, that's what we're looking for, 105 exactly. But it's a race between both. It's a race between the dollar and S&P futures. What hits the 200 first? That's really the question on everyone's mind. And that's what I'm looking for. In terms of the 10-year yield, TNX, same thing. We talked about this. This is the head and shoulder setup that we have. The last time we had this, we hit down to around 2575 and then bounced. I'm looking for to get to around 34.43 and then possibly bounce back to around 37. That'll be 3.7%. But again, I do like treasuries here. I wouldn't run out and buy TLT just yet. But again, in terms to trade it, again, we can always take a look at S&P futures or QQQ or NASDAQ futures because they're a little more rate sensitive growth is more rate sensitive than just the broader S&P 500 market. Obviously, what's hurting the S&P today is Apple, since it's the largest holding of SPY, and we can go ahead and bring that up here on the hourly. And you could see that 141.76 is definitely in play. We don't have any support here on the hourly unless it's 141.76. So again, if we get more bad news out of China, that definitely could be in play. Right now we're at 145.24. We are below the 20. We are below the 100. So again, that China news is hurting Apple, which is my largest holding. That's the best. Let's answer some questions. What's the resistance for AMD and Diz? I'm long both and in pain. Well, it depends on what is your target in terms of how long you're willing to hold or how long your investment's going to be. If you're looking for a trade, really that trend line here around 80.65 is the AMD resistance. In terms of Disney, again, we could always draw some nice lines here. So let's go ahead and start from here, and then we can go all the way down here, and we could always, let's go here to here, and then I can always just extend it to the right. Yep. So right around 110 is your next resistance. Lines up perfectly with that gap to fill. So again, 110 is resistance on Disney. I was a week early and $1 short on those calls. I had the 100 calls and we didn't get them, which pisses me off because that was the one loss that we had for that week. And of course, literally 2 days later, the weekend later, Bob Iger comes in as CEO, the stock source. Happens. Being right is not enough. You have to be right on time. This is why it's so difficult to trade options. I've been saying it over and over. This is very difficult to do, but it can be done. You can learn it and be better from it with the mistakes you make and the education you take, and obviously the screen time. It's all about screen time. Do you think Apple will drag down the rest of tech? Actually, VIX is near support. Yep, that's the next thing. Let's go take a look at the VIX together. All right, the VIX I was looking at today, we talked about dollar, we talked about the yields, we talked about S&P. Let's take a look at the good old volatility index. Volatility index could be a little skewed, and there's a reason why. They go by 30-day call options, right? We know that. The problem is that the market is really pricing in. Now traders are piling into 0 DTE, day to expiry, SPX and SPY calls and SPY puts. So everyone is really just trying to scalp as much as they can. Completely understandable. You have a gap to fill at 2109 on the VIX. Really, and I talked about this as well on the actual newsletter. Let me see if I can bring it up here. We talked about the VIX. It says so far our bottom call 35 to 3600, 200 MA weekly. That changes, is still holding, so that's great. Bull case would be 4300. That would be the August retest. I highly doubt we get there on just a straight green shoots. Again, same thing. You're not going to get just green every day. So again, you're going to get chopped, a little bit of a pop, come back down. You're going to get some retesting. That's completely healthy for a market. But again, the last thing I want to see is just green every day, because that's bear market rally talk. And then you're going to get a nasty rejection. You want some retesting back and forth to create the actual trend, not just some one-off CPI number boost and then they sell it off because everyone's happy to get the hell out. Again, green shoots to the upside, so prepare for chop as we get closer to that trend line on S&P. Remember, we talked about it right above the 200-day. And the VIX at 19, very, very important. And then the Christmas holiday as we wrap up. All we have coming up, guys, if you think about it, is we have the NFP, we have GDP, we have some OPEC meetings, and we got Powell this week. In a couple of days, I think about 9 or 10 days after that, we have the CPI number, and then we get an FOMC for the end of the year. And after that, that's pretty much it. I think we'll get one more retail sales number, but that's really all. And then we're basically set for the year. So again, I'm still calling for the Santa rally, and the Santa rally should get us to, if we go ahead, remember the VIX right here, 1944, that's your bounce level. That's the level I'm looking for where, again, it should line up with that 200-day and that trend line with S&P 500. Again, it really comes back to the simple question, what hits first? Does the 200-day hit first on S&P futures or the dollar? So that's really the horse race that we're finding. So again, if we get above 40.57, that is right near the 200-day. You got two options. You can play the target here to 41.35, which is that trend line. That'll probably that Santa rally where that's it, that we're done. That's right around 135 points to where we are, which is great, definitely possible. If not, then we do reject and get back down around to 4,000 to 40.57, which will retest the 200-day. That seems more plausible. Again, I don't think a lot of people would complain from the boost of 3,500 to 41.35 with a rejection back to 40.57. To me, that's around a 16% rise from the lows. That is your textbook Santa rally. Could that roll over into Q1 2023? We'll get over that once we start talking about the end of the year and talking about our year beginning preview for our members. We'll do that as we get closer to the holiday. Remember, seasonality is in play. November and December are usually strong. So again, none of this should be surprising. But again, that trend line needs to break in order for us to start looking forward to a new cycle, if that's the case, or a soft landing. Again, the big bull case is still that August retest, that 4,300 level. Would I like to get there by the end of the year? That'd be great. I don't think we will. If we get to 4,300, more than likely to be January. January seasonally is pretty good. Why? Because you have the 401k matching, you have funds rebalancing their portfolios, you got stock buybacks. So again, you have a lot of things working in your favor. There's still some obviously headline risk. You got China COVID lockdowns, you have Ukraine and Russia, you have interest rates are still relatively high, you still have a hawkish Fed, maybe a little less hawkish, but still a hawkish Fed, a tightening cycle. We still have QT, quantitative tightening. Bonds are being sold, obviously, by the Fed to reduce that balance sheet. So again, things are not, there's still some risk out there. That's why I'm still sticking with that trend line rejection. Again, we'll get there. We'll probably reject, get back to that 200-day by the end of the year. That seems more structural. That seems more plausible than just a green shoot to the top or a retest of 3,500. I don't think any of those are possible. If you ask me what's more likely to happen by the end of the year, 4,300 or 3,500, I would say 4,300 is more likely than 3,500 by the end of the year. But again, you're right in the middle of it. So kind of tough to play that in that sense. It's very binary, just one or the other. So again, trend line, reverse, and then we'll probably hug the 200, but you got to break that 200-day first. So again, I think you're kind of skewing puts here on S&P 500 as we'll probably chop in with some news coming up this week. Do you think Apple will drag down the rest of tech? At least today it will. Apple's such a big part of it. You can see the futures market kind of pricing in how Apple is sliding with those China COVID zero protests. I still think Apple's great. Apple's had headlines forever. Apple's is fine long term. The problem is that let's see where we close. If Apple closes below the 20-day on the daily, we know that's not a great sign for the market because that 20 days giving us a lot of like a hint of what the market could do in the future. So again, that 20-day. Why the 20-day? Because that's what we do for trading, the 1 hour 20-day setup. So again, if we start getting to around, you say around 145 currently, you start getting to 136. Here you go. 145, 146.91. We're probably going to open below that 20. There's no gap to fill. That's done with. In terms of support, 141.76, that 23.6 level is the level you're looking for. BIIB, let's take a look at it. Biogen is at the highs of the daily. Is there any gaps to fill? There's one right here, right around 333.39. That would be a nice level to probably take away some risk off the table on Biogen. There's a gap to fill here at 291.82. What I short here, I don't think there's a lot of volume on those puts. If you're actually trying to do short the stock itself, it's going to be a little difficult. Why would I say that? Because you have a gap up. That gap should have probably been filled, but it continued higher and there's another gap. So again, if you were looking to short BIBB, you need to break 290.92. You need that gap to fill and see where you go from there. And then you could always maybe target 201.99, but you got another gap here at 333. So you're right in the middle of everything, Andrew. A tough call all around. All right, guys, that's basically what we got for the week. We got a lot to watch. Finally, a full week of trading. Let's make it happen this week. Let's kill it. Oh, the GAR newsletter is awesome. Thank you, Alex. I typed it up on Saturday. The team edited it to make sure I don't have any issues with punctuation. I hope you guys like it. It's really just the stuff that I'm watching for the week, kind of recapping and seeing where we are. So again, big shout out to the team for helping me out with the newsletter because that gives you guys more info to do what you guys got to do, which means to profit in the market. And I appreciate you guys as always. Cyber Monday. Yes, we extended the Black Friday deal. It's Cyber Monday now. $1,500 is the annual plan. That's 50% off if you just paid month to month. We still have masterclass as well. That's going on. Feel free to DM Kevin, KEV GAR Cap, on Instagram. He'll be more than happy to assist you. We'll go and leave it there, guys. Thank you so much for joining me today. Thank you for your kind words. This really means a lot to me to do this every day. I love talking to you guys, and it keeps me out of my pajamas. Because when I was just trading at home during the pandemic, I would just wear my pajamas and work. But now, actually have to dress up because I'm on camera, which is nice. So always nice to talk to you guys. Have a great rest of your morning, and we will catch you guys tomorrow for the morning note. We'll see you guys then. Cheers.